Okay, what's up, my people? This is Nick, Big Tuna, aka the HOUTX Traders. I'm here from Houston, and I had a request for a video on how I do my fibs, and I feel this is the proper way to build your fibs. What levels you need to be looking at to make your trading best, okay, and more successful. And I will tell you, the single greatest thing I learned in trading was fibs. For one reason, two reasons. A, finding proper entries, and B, keeping me out of dumb trades. The most important thing ever, I think, is keeping me out of dumb trades. And I'll show you my screen now, and we'll get into this. Okay, so you guys can see my screen. I'm on TradingView. This is my Fibonacci tool, okay? It's right here. And this is my favorites. So if you're new to TradingView, you can click on over here. You have your drop-down menu, and you can make your favorites. I don't really use trend-based that much. I have it on there, but I'll show that to you in a little bit. So anyways, here's my Fibonacci. And we're going to say we're going to draw this from the bottom to the top, okay? And the reason why I did it this way, bottom to top, is so you can see the percentages. So we'll come in here to settings, and I'll show you those are my settings, okay? I have 0, which would be the top, and then I have 1 right here, which would be the bottom. Currently, I have 61.8 selected, but I don't normally use that, okay? And then you can change these colors however you want them. I'm not really worried about it. I do like to have my 1.1 as red because that's where I put my stop loss. So 1.1 is 10% of the Fibonacci move. Some people make their stop loss, oh, it's 10 pips, it's 20 pips, whatever. My stop loss changes for how big the move and how big the Fibonacci is, okay? So I always go 10%, and I found that that works perfectly. Sometimes you lose trades, but majority of the time, it might give you a little wick in double bottom or double top, whatnot, and the 10% rule seems to help. So what are the most important Fibonacci's for me? I love this 50%. I don't take trades in the 50%, but I'll show you how to use it, okay? The most important one for me, besides the 50, is a 78.6, 0.786, 0.886, okay? My greens here are my TP levels. TP1 is 27, 0.27, negative 0.27, because that's the extension, and negative 0.618. So you'll see 618 here and a 618 here. So without the negative is the fibs inside the move. If it's a negative, it's external, okay? It's on the top side of the move, and that's where my TPs are. You can see the rest of my settings if you want. I do not use a background, I don't think. I think it's set to 0, you'll see. But anyways, those are my settings. Here is the fib, okay? Again, as you bring the fib down, 27 extension. So there's how I draw, or there's my settings. So let's go into the chart, and I'll show you this. We're going to start off on a higher time frame. So if you are brand new to fibs, let's just go on a chart that is from scratch. Let's just pick a pair, and we'll delete everything. Let's go GU, okay? We're going to delete all this. We're going to start from scratch. If you're a brand new trader and you haven't quite figured out how you want to use your fibs, this is where I suggest you start. I know people who can solely trade off fibs and start from the daily to 1 hour, and they build fibs on top of each other, they layer them, blah, 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 and they can get down to the 30-second chart and hit trades all day long, and they use fibs. So this is the way I suggest you start, okay? We went to the 8 hours, so we have like a bigger view of what's going on, okay? I like to start at the swing bottom where you know the market has broke trend, okay? So in this situation, we're selling. We have a swing, we have a low. We now have a higher low, excuse me, a higher high and a higher low. And that's followed by another one. So the market, as you can see, has changed, okay? So I would like to start down here at the bottom of this fib, Okay. In this situation, you draw it from the bottom to the top of this. I'm going to extend it out here a little bit to the right so you can see where it hits. Okay. We'll zoom in. There is a fib. Bottom, right here. Top, comes down. The reason why I have 50%, for this to be a valid Fibonacci, it needs to hit at least a 50% retracement. Okay. Push up. 50%. Close down here. Or it doesn't even have to close. It just needs to at least wick 50%. Okay. And then it needs to break this high. Okay. Once that happens, this Fibonacci, you might as well lock it in place. Okay. It's not moving. It's done. Okay. You can, if you want to, there are strategies and there's ways where you can start to take trades at 50% and the 618. Okay. I personally don't. That's another video for my personal strategy, but know that there are buyers who sit in that zone. And if you are looking for buys off of this break, now that you know momentum has changed, right? Sell, 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 bing, bing, we know momentum has changed. Now we can start to look for buys in that zone. I mean, technically, since this gave us a low and a new high, that would have been the first Fibonacci. Low, high. This Fibonacci is still valid because it did not break this high. Okay, it did not break it. This is all just consolidation, the market playing with people, comes down, gives it a perfect 88.6 rejection, and it sets a new high. So really, the first Fibonacci is right there. Bingo, bingo, and it just plays around and then sets a new high. Actually, we'll draw this to here because that's the actual low. Okay, so let me just delete that just to keep the charts clean so people can follow along. Okay, so this Fibonacci is no longer going to move. Once it hits 50% and it makes a new high, or flip it if we're selling a new low, that Fibonacci is done for. We start a new Fibonacci. Okay, this is very important, very, very important. As you can see also, just since we're here looking at this, our TP would have been 27 extension and it got hit. TP 2, 61, got hit. Okay, just showing you. And this was a 61.8 retracement on this original Fibonacci. It went to the lower 78.6, 88.6. That is my zone. That's where I take trades. Okay. We can get into that more, but just know that I only like to take trades in that 786, 886. And this is exactly what I do in my chart. I draw a square, I mark it out by zone, and then I look for price to come down there, look for other confluences, blah, blah, blah. We'll get into that later in another video. But there it is, okay? 61.8, wick, closed above, shot off, hit our TP. So let me delete this, because now we're going to start a new Fibonacci. Okay, so that was our low. We started from here. This is our high. We draw that Fibonacci. We notice price does not hit 50%. Okay, so that's not a valid fib. Let's go to the next high right here. This does not hit. Okay, we'll go to the next high. Okay, this does not hit the 50. So we still don't have a valid fib. We come to the next high. Okay. Remember, we're not worried about this now. We're not worried about any of this because that's our high. We want price right here to come down. And as you can see, we have no hits on that Fibonacci. Okay. We'll drag it up to this high. So for GU, as of January 20th, this is my opinion. This is not financial advice, by the way. This is all for educational. If you need financial advice, go see a licensed financial advisor. Okay. In my opinion, this needs to come at least down to this zone before we continue to buy. If you'll also see, the price needs to come to that zone. That's also the 50%, right? That's also these lows, which we're not going to get into it now, but that would be liquidity and there's also structure here, whatnot, okay? But that's the basis of how you build a Fibonacci, okay? I just showed you where you start, which would be the bottom or top, whichever one. Once you now have a change of structure, you have a shift, start at the bottom. Okay, we'll do it one more time. You guys can pause and rewind this. Bottom to top, it hit 50%. This is the low of that whole sequence. There's the new bottom. There's the new top. Okay, it hit 50%. There's the new bottom. The new top is way up there. Okay, so in this little time, we had this. So if you want to be a Fibonacci trader, you can just simply find a swing, wait for it to come into your price, and take trades. Okay, you would have taken that trade right there. It would have had some messing around. It might have scared you. But eventually, the 27 and the 61 both got hit on that first entry. Okay, there it is. Your second Fibonacci was there. It did not give you quite a deep of a retracement, but it did hit 61.8, and that's technically the most powerful of all the Fibonacci zones, is the 61.8. And what did it do? It popped off and it hit both TPs. So if you're a Fib trader, learn how to build your Fibonacci's, learn how to look for your two zones, the 50 and the 618. That's where majority of the computers, the algorithms, and the buyers are going to be sitting. That's where they sit. Okay. If you think that algorithms are mathematical functions, well, how are they going to do their math? What parameters are they looking for? Maybe number of pips, maybe pullbacks, whatever. Fibonacci's. Okay, that's how they're going to think. It is definitely one of the key components of that. Okay, once you learn it, you're good to go. So now let's think. Okay, so that's the 8-hour time frame, but you can do this all the way down. We're going to come to a smaller time frame. We're coming to the 15-minute. Okay, and let's look at this. We have a top, we have a new high, we have a break, we have a break, we have a break. Let's just start right here. I'm going to pick a random spot and let's see. Okay, let's say that this is our change of structure. Really, I kind of want to start right here. Okay, we'll start right there. We're going to zoom in on this so you can see a little better. But let's pick the top. Okay, there's the low. It came back up. It gave us a double top, a full, but it did not hit our stop loss. Okay, so there's one Fibonacci. Okay, our next Fibonacci, we're going to target this next low because we're not worried about all these because it's not broke that. Okay, this is kind of a crazy example because after that it just shot off. But you would technically be drawing this Fibonacci to there, and it did not hit. Let's go to the next low. So this is our Fibonacci, right? That is our overall fib from that big play. So let me make this a little more viewable for you guys. Okay, so that is our fib. Unfortunately, we didn't have, there's not more examples here, but you wanted to. This is your now sell zone. As you can see, price came up, tapped our zone, sold off. Came up, got into our zone, sold off. Up into our zone, sold off. Now, if you ask me, this is probably, I don't know if it's ready to turn. It might come back up into this zone. It's probably going to come back up into this zone. We're getting into more of a strategy type video. That's not really the purpose of this video. The purpose of this video is how do you build fibs. Okay, so that's like entry level, how you first start building fibs. Okay, now I want to show you a little bit more sauce, a little bit more how you can mess and play around with your fibs. Well, actually, before I do that, let's come back out to the 8-hour. We'll go to the 4. Okay, I want to show you how you can stack fibs on top of each other. Okay, so let's delete these two fibs. Let's delete this fib. Let's delete this. Delete this. Delete that. Okay. So if we're on the 4 hour now, we drew that last fib, I believe, off the 8. Okay. Let's come up to a higher. Let's go into the daily. Okay, let's go up to the daily. So what do we have? We have a swing high. Okay. Right here. Come down to the low, no retracement, no retracement, no retracement. So really, we're working off of this fib right here. There to there. Okay. So now what do we see? Let's make this first viewable. Okay. This is so cool. I love it when it does this. This 88.6, 78.6 is my sell zone on the daily. If you also look on, we started building fibs down here on the buy side. This 27 extension, our TP, right there, lines up with our sell zone. So that is giving me confluence that this price will eventually, I'm not saying it's going to do it now, come into our sell zone and hit this TP before it turns around and really start sell off. And if you start to look at price action, what's there? You've got this nice sell candle. You've got these buy candles that are left over that haven't been hit. You got this nice wick right there, right? So in my opinion, there's a very good opportunity for this to push up, take out all these candles, all this liquidity, get up into this zone, hit this TP, which would double top that wick, maybe even a little bit higher. I don't know, maybe a little bit higher to take that wick out. And then we could see the next leg of the push. Okay. Then we could see the next sell off. Okay. I mean, that seems to make some sense to me. Let's just go a little crazy. Let's just go out to the weekly. Okay. Let's reset this. Okay. So this is the weekly, right? Top to bottom. Look, we might get a little bit more of a push up. Okay. Our sell zone is up here. So yeah, this fib that we drew is retracing, and we're saying that it could probably come up a little bit higher, hit these TPs, come down here, sell off, okay? Right? Because really in the big weekly scheme of things, we want the price to go up here. Well, then how's it going to get there? Well, let's look at this. This wick never touched, never 50%, never 50, never 50 top to bottom on that is right here to 5618. I don't really like to take trades there, but that's not the point of this video. What happens there? This 50% lines up with the TP of that sell candle. I know we're getting a little crazy. Let me delete some of these fibs. Okay, let me delete this. We'll just know that we'll level this sell zone. Know that it needs to get there. Okay, that's on a big time. Okay, so let's think about market flow. Okay, we know that price needs to get up here. We think price needs to get up there, right? That's so we have a push up. We have a push up. We could do an Elliott wave 3-leg push. 1 push up, 2 push up, retracement, 3 push up, either to here. I mean, the third leg would have to come into here now and then come down. We don't really know, but we can start to build an idea of what's happening here. We know the market needs, or we think the market needs to come up here. Our fibs are also saying the market needs to come down here. It's very, very possible that it does it right now. It's very possible that this pops here, comes down here, hits our buy zone, hits our TPs for that. Okay, then comes up here, hits that, and then we start to figure out a pattern. Now, this is on a weekly, but you do this same step all the way down to the, you find your zones where you want to trade all the way down into the lower time frames. And you start matching up your TPs, right? If this is our sell fib, right here, here's our sell zone on a small time frame. It's a 5-minute time frame. All right, we start matching up these fibs. If we start to get our TPs, all right, there's the first fib. It almost wicked to 78.6. And actually, if I drew this more precise, I think it did. First fib. All right, the second fib is going to be at the next high. Right, it does not have a valid retracement. This is kind of where, on the smaller time frames, you can start to play. Okay, this is like, if what I just showed you the first time was like entry level to fibs, top to bottom, weight to 50%, blah blah blah. This is where you start getting a little creative now. Okay, this doesn't have as such hard, fast rules as I told you before. But the first fib was there, top to bottom, and then that was the retracement. The second, yeah. So then this, I think it's still this fib there. Okay, top to bottom. The second one then would have basically the same fib. It's just the same double bottom, but the high would have been shifted here because that's no longer the high. So that would have been the high there. Okay, it did not give us a clean 50, so technically we should be drawing this fib up to there. But what I wanted to show you, no, that's not. Sorry, I pushed the wrong button. What I wanted to show you was, oh, okay, I did it again. F1 instead of escape. What I wanted to show you was that's a move. I mean, it's not a technically the most perfect fib move, but that is a good fib move. That move right there, even though it doesn't qualify for our perfectly fib function, the TP for that move lines up into our sell zone. Okay, so you can be creative when you get down to smaller time frames and you start looking at moves, as long as it makes sense. You know, that move, or even you can do this. Like that was, this from there to there is one good bullish push from there to there, and we fibbed that. We had a retracement. We just didn't have a deep enough retracement. But on that move, the TP lines up with our 78.6, and we're starting to see rejections. Now listen, we also have oversold, 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 and now we're starting to see diversion. You have an oversold, you have a lower RSI. So right here is higher, excuse me, is high. This is higher, but lower on the RSI. So this is how you could stack your fibs on a smaller time frame. You could get a little creative with your internal structure fibs, because as you know, you get down to a smaller time frame, stuff can get a little bit crazier. You know, your hard, fast rules, you can manipulate a little bit. And there it is. There could be an entry right now on GU, right? We have oversold, we have a TP, we have a valid retracement sell area. And if I was to take this trade, let's say you're shorting from here, let's just say your stop loss would be 10%. As you can see, it's 1.1 there. Really, your first TP, if this is a valid trade and this is right, your first TP is right there at the 27. Okay, and if you look, that's a 3.5 to 1 trade. Hey, that's pretty good. And this is on a 5-minute chart. We just lined up a sell TP with buy TPs. All right, let me undo that. I'm sorry. We just lined up multiple TPs to give us an area where we think the market could react. We also have RSI divergent. So we're stacking confirmations. It's in our sell fib. It's in our TP fib on the buy side. We're having several pushes on the buy side up. Okay, elite wave. All right, we have oversold. We're probably at 5 right there. And I'm sure I could find more, right? Like we could start really getting into a different strategy, but that's not the point of this video. The point of this video is fibs. So that is how I suggest you build your fibs. You start on a higher time frame where the market, and let's just delete all this, where the market can give you a more clear of a picture of what's going on. Start at the swing, top or bottom, right? Start at the swing, and you're going to say, well, dude, the price is right here. Let's say the price is right here. Dude, we've got a long way to get up into our sell zone. And you're absolutely right. That's on an 8-hour time zone. So you could come and start building by fibs and figure out, well, how am I going to get there? Okay, how am I going to get there? It's so far away. Well, there's your first entry, right? 7888.6. There's your first entry. There's your first stop loss. And guess what? Your TP1, 27, boom, successful trade right there. Okay, now we have one successful trade. Okay, now where's our second fib? Right here, top, there's the bottom. I personally don't take this trade very often, but there's your 61.8. And the reason why I don't is because now your stop loss is down here. Okay, your TP for that trade is right there. We're only at a 1.85 to 1 profit and loss, risk to reward ratio, excuse me. So that's not my favorite trade. I'm not going to lie to you. But technically, there's a second successful trade. Okay, so we've got two in the bank already as price is getting up. This works on smaller time frames. So if you're not comfortable trading on the 8-hour and waiting for days for this to get into your zone, calm down, find structure on a smaller time frame, build your fibs, look at a higher time frame, build your big fib. Look at how are you going to build fibs and take trades to get to your other fib to either buy or sell. You can take smaller moves because you know the price needs to get up there, down there. Take trades until it gets there, okay? Take trades until it gets there. Now, we also said that this fib here wasn't valid to all the way up here, okay? Where you're like, well, shit, I didn't miss this. I didn't catch this trade. I didn't catch this trade. Okay. You know what? Look at this big push right there. Right? What did it do? It came back and hit, and then it came back and gave you a double top. You could have scalped some pips off that. Came up, let's do this one. Guess what? It came back and hit your 61.8 and came back up. You could have taken some pips off that. Okay, you could have protected early. Matter of fact, it's doing it right now. 61.8. There's 3 different opportunities on a smaller time frame where you could have said that's the swing, there's the push. You could have taken that trade, and you'd have had at least a double top. You could have taken that trade. Sorry, wrong button. It came right back down into the same zone, right? It came back up, gave you a head and shoulders. There's some scalping pips, right? I'm not saying that every trade's going to be a banger, but at least now you can start to see that the price is respecting fib zones. We don't know where this is going to be. Obviously, these stop losses aren't so high, or so low, excuse me. But you can see what I'm starting to say. You can build, okay? And that's the whole point of this video. The whole point of this video was to show you get to higher time frames, get your overall picture, and then start to figure out how you're going to get into where you need to go. And then just go down the time frame until you get there. And so I kind of just showed that. I think I did a decent job. That's the basis of how you draw fibs. Okay, top to bottom, we had no retracement. We had no retracement all the way to there. There's our retracement. On the higher time frames, there's our retracement. I would like to see it get up into here before I take sales personally. But it could reject. I mean, this is a 61.8. As you see, it's not perfect on this 61.8. The Wickham is coming up above, but it is finding resistance in that area. That is definitely perhaps about to turn around. If you follow the Wyckoff, you know that this is what's called a distribution or a consolidation, excuse me. And you look for usually what's called a spring, which is a wick up, before it tanks down, right? And so you might have that scenario now. I don't know. That's not the point of this video. I think I'm going on tangents. Draw your fibs to higher time zones. Come down to the smaller time zones and start to build your fibs till you get there. You can go all the way down to the 1-minute chart if you want and take scalps with this. Please, I know you probably have a lot of questions. Please subscribe. Please like. Please ask me questions. I'll reply to all the questions. Thank you for watching the video. Look for more. Peace. Let's go. Let's go.